Morning, Steve here in Chicago with the morning grain comments. We had an interesting trade overnight. First of all, the USDA came out and lowered crop ratings for corn, beans, and wheat more than expected. We also saw a private estimate of a corn yield as low as 163.5 and a bean yield at 46.5. That opened the markets higher. And then since then, we've traded off those highs. In fact, corn and wheat's actually lower on the day. Part of that could be that we're looking at an extended model across the U.S. that suggests that the heart of the Midwest, parts of Iowa, Illinois, and Indiana, is going to see normal weather over the next 2 weeks. Yesterday, one of the maps had the rains north of that and continued to see warm and dry conditions across the southern plains and parts of Nebraska and into parts of Iowa and central Illinois. The other map has the rains further south. So we're still dealing with two maps that have some kind of divergence of weather over the next 2 weeks. As far as the numbers go, the USDA said the corn crop is 62% good to excellent. That's down 2 percentage points, and last year we were at 76% good to excellent. Iowa 68, Illinois 63, Indiana 47. Minnesota has the highest rating at 80. We've got Nebraska at 61, and South Dakota is the lowest at 28. Over in the beans, 57% of the crop is rated good to excellent versus 61 last week, down 4 percentage points. Last year we were at 71. Iowa's at 62. Illinois dropped to 59. Indiana's 47. Minnesota's 72. Nebraska's 59. And down in the Delta, most of the crop is rated around 70% good to excellent. So again, you see the divergence of where the crops have gotten rain and where they're still rated above average and where the crops haven't. Spring wheat was dropped to 33% good to excellent versus 34 last week and 68 average. So in general, we're dealing with three factors. Number one is that our crop is smaller than it was a year ago. But is it small enough to cause prices to rally because of the big global supply? Number two, our demand is going to be down this year. That's especially on the export side and especially in corn. Does that offset the lower crops? We also don't really see big drops in crops outside the United States, and South America can probably satisfy the shortfall in the U.S. for beans and corn for now, and maybe wheat in the Black Sea. And so all that suggests that we just trade in a trading range. We can't break because our crop is smaller. We can't rally because our demand is down. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.